to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to talk about some of the rotation that's starting to happen. Is the great rotation to small and mid caps actually starting? Let's get into tonight's video. So welcome everyone. So it's getting hard to figure out where I'm coming from. I'm doing produced videos, and I said I'd do occasionally, I would do a live stream. That is tonight, so welcome. I'm still going to be, so there won't be a video in the morning. This will be for tomorrow, basically. So I appreciate everybody showing up. A couple things that I want to discuss before we get into things. I appreciate everybody. I've had reasonable increase in the Substack newsletter, so continue to do that. That's always the backup for every morning because I put that out just a few hours before the New York Open. I work crazy hours. I tend to be up until about close to about 5 a.m. New York time every day. It's a great time to trade if you haven't traded off basically the Londoners, and then when the early New York people come in, it's one of the best times, and it's nice because there's usually not a lot of rhetoric around the market, except for Sunday night when Powell came out and was talking about the indictment that is coming on and trying to be strong and standing up. He might want to reconsider that. There's a lot of money leaking at the Fed on those new buildings. You could build a new football stadium for what they're doing there. Anyway, a couple things. I talked about this in Monday morning's newsletter as I keep seeing these things happen. And it goes back really since the pandemic. It started to change the amount of new players in the markets and some of the flow that we see. In my opinion, just going back, I've been around for 46 years, so I've seen a lot of transitions from decimalization to complete digital trading at ultimately, and there's just been so many changes. But one of the changes that I've been recognizing is that the flow, the emotional flow of the markets right now. There's so many players, everybody's trying to jump on. So you get these spikes in volatility and you get these dead end roads all the time. And on Sunday morning, when I was releasing the Monday's opening, I said that these prices was a absolute bargain. And it was an absolute crazy trade. If you get the newsletter, there was an STX trade pretty much across the board on all the indexes, the NASDAQ and the S&P, that you could have taken advantage of. And I would watch, I see a lot of things intraday, which I call flushes, where you see a big surge in prices up or down, and then there's an immediate rebound. I always look for those for endings of minor trends and things of that sort. So they also happen on daily and weekly charts. And I think we saw a pretty interesting trade on Monday. And so make sure that you watch for that. I just address a couple of things I've seen over the last, we'll call it week or two on X, on some comments. One of the things that you need to know, there is a date stamp on the top of the data sheets that I put out in Substack every day. And that is basically, most of the numbers are generated from yesterday's action. And some numbers are affected, some of the commentary might be affected, but the numbers, the probabilities and things are still valid. And one of the things that I'm going to do soon is just do a review of a data sheet and talk about how you can more effective use them. And the last thing I got into a project last night that came along much faster than I expected. I use Claude or Claude Code most of the time when I'm using AI as far as market stuff goes. And one of the things that I figured out, this was a question for those of you that have the indicators, one of the things is that it's somewhat nuanced around the ppms and reading them and getting all the puzzle together. So I thought last week I started working on this, and what I was working on is trying to put a script together. You can put a screenshot into Claude, just on a normal Claude prompt, and then if you have this file I'm working on, it will do all the analysis just as I would do. It knows all the metrics of the ppms and what triggers. So I'm going to put this out free to the community, and I'll figure out how to distribute it. I've got a couple more things to do. I kind of went down a rabbit trail. Now it will actually do swing trades and longer term trades. There's some things that have to be tested. It shouldn't take me too long because, like I said, I was up very late last night because I get distracted with this. So I'm going to show this to you probably in an individual video to go over it once I get it to the next step. And then for sure, I'll probably maybe put it out in code on the Discord channel to start, and then we'll figure out other distribution if you're not on Discord. But it's going to be free, and you need the indicators because you got to have the data output. So you can do a screenshot, and you can download a CSV file by clicking on one button. I'm going to put a video on how to do this. But this is why I did it. It was some comments, some DMs that I got, some other information, some emails that I've received over the last month or so. It's hard. I can put out all the training videos I can, but this is next level. I put out basically the script, and it actually generates the trades. And when you see this module I built, you can put your actual trade in there and your stop loss that will track trades. It'll do a portfolio of 5 right now is all I can do, but it's going to be pretty cool. Absolutely free, everybody. And if you don't own the indicators, and that's the only thing that is required to have the indicators, so you can do that. And so the price that's on the indicators, I'll let you know when all this comes together. Should be, what is this, Tuesday, so it should be by the end of the week. But it's way cool. It takes away some of the mystique and understanding the nuances. And what I'm looking for is ultimately feedback on Discord, and we can just unpack this thing and things that we're seeing and how it works. And you'll see it's going to be pretty cool. So I'm excited about that. I wanted to tell everybody about that effort. It actually has been working up here, and I put it into code last night, and it came, like I said, it came around really fast. And I have other code that I have developed for doing analysis of the sheet that you have up here. I'll just show you real quick, just since I got a little deeper in this than I thought I would, but it's okay. What you have to have is all these indicators, everything that's on this screen. There's 9 of them. And so once you have all those on there, you just literally take a screenshot of this thing, drop it in, and then there's over here, you can actually go over here and download a CSV file. And this thing's really cool because it parses out the data, only uses the data it needs, so it can build swing trades and track the trades, everything. You guys are going to love this thing. So anyway, so I can't wait. And like I said, I'll do some videos, just training videos on that. So excited about that. So if you want to check out, you go to kindlereport.com/indicators. In fact, here's the link right here that you can do, and you can check that out. But like I said, I'm hoping, even if the plan is, even if I update this, it's a JSX file, you just dump the file and a couple other little bits of information. It takes literally under 2 minutes, and it generates 2 trades. It does short trades, long trades, any symbol that you want to put up. So it's pretty cool. And like I said, it'll be free to the community of indicators. So I'm excited. I've been working on this for in paper and in my mind for probably the last 3 months. So I think it's going to be pretty good. And we'll be doing a lot more sophisticated things like getting over a 50-day moving average, which absolutely means nothing. But I know everybody's excited because Bitcoin popped. But if you read the newsletter the last couple of days, you already knew that was happening. So anyway, yeah, let's get into tonight. So let's talk about a couple of things that is out there. CPI came out today. The core was at 0.2. I'm going to see if I can bring something up. I'm going to get through a whole lot of information tonight, I hope. And I'm going to bring this chart up right here. Let me show you real quick. So this is the CPI. And what's really cool, if you have the indicators, these are the same indicators running the algos. And you can see it's interesting that CPI is being forecasted to decline as we get out here in 27, 28. Why would that be? That's most likely going to be efficiency, productivity increases. I'm going to stop short of sounding like Kathy Woods, but basically the inflation scenario, everything you hear out there. I was commenting to a friend just a little bit ago. Everything, if you turn on Bloomberg, it's every other story is Orange Man bad. Anything that Trump does, anything that comes out of the economy, Trump caused it. It's Mike Bloomberg must hate Trump so much that the whole script of this show, they actually do a political show during market hours for like 2 hours every day. That's all. And meanwhile, it's during market hours, and that's what they chose the best use of time. It's kind of funny. I like the way the screen looks because it's got quotes and stuff that I don't have all the time. So I leave the sound off. But once in a while you turn it on. It's kind of funny. But the point of this is that we're finally, I'm going to get into the main crux of what this video is to be about. We're seeing some decent rotation happen as far as the small and mid cap. They're the leaders this year. This is the first time we've seen this for years. Will it stick? We'll see. I've got some ideas on this, and I have been promoting that would be the case for some time. Once we start to see this yield curve steepen, and that's happening, not happening fast enough. Chances are we're going to get another 25 down on the front end. It's not. I know it's being promoted as this dovish and accommodative. Like I told you the other day, I think in a newsletter, you're going to hear that word a lot, accommodative. What the Fed's still on track, what I said they were doing 2 years ago, they should have had it done. But once again, Powell's just like slow walking this thing, but they want the yield curve to be steepened by at least 75 basis points. And I would go to the 1 year or the Fed funds, not the 2 year. I don't care about the 2 year. That's just that's a retail number. But if you're in the banking system, you do not care about that. But the Fed funds and up to the 1 year, all that maturity and the games that are played with banks and short-term lending, and then the 10 year. And when that spread gets to 175, that's where we'll actually really see some action in the small caps and the mid caps. And even though relative, there's been a shift over the last several weeks, maybe 2 months, and that's good, but we're still a long ways from truly leading like would need to happen. I remember Tom Lee telling us 2.5 years ago that by right now, the Russell was going to triple. Okay, well, it hasn't. It's hardly made a new high. So the point of what I'm saying here is I think we're seeing some rotations seriously come in. Good example today, most of the other indices were flat, down maybe 0.2, and the Russell was up 0.5, but I'll show you in a minute, the Russell possibly kind of basically did a short-term peak as far as that goes. So we'll see how this plays out. I'll play all this scenario out. So one of the reasons I'm talking here, I'm just, we're pretty close. I want to get the database updated, and then we'll go through that. As far as I want to tell you is I'm going to set up some things that I want you to watch for the true rotation to start to happen. But the individual stocks in the WaveTech Portfolio Manager, I haven't looked at it, but I'm going to update that strategy, which basically was a short-term individual stock strategy. I think it has 15 stocks in it, and where you can start to play the rotation. It did pretty well even a couple years ago without the rotation. It did well. We should be able to get some serious traction. So we'll be talking about some of this stuff as far as that goes. Like I said, this will be technically the video for Wednesday morning as we go through the rest of the show. So just know there will not be a morning video. This is it. Okay, let's go ahead and let me see if I can get queued up here. Oh, I do want to go back just 1 second. When I show you the CPI, you can do this with any of the metrics, and it will forecast out in the future what's likely to happen. We're not seeing any serious change in momentum for CPI to grow. I remember when we were over here. Let me see if I can get a. Oh, I'm not live on the screen. This is a screenshot. But anyway, when we were back about a year ago, I was talking about we're going to see an increase in CPI. It was supposed to round out around this 21. It did, went a little bit over it, and now we're seeing the forecast. The red dots are absolutely flat. Let me zoom in on this so you can see this. You can see they're going flat, and they're going flat a bit lower, around 2.2. So it'd be interesting to see how this forecast goes. The previous forecast, when we were a bit lower in the rise, was spot on. It's also interesting, this green dot, for those of you who have the indicator, this is called a pivot. This basically set the floor for CPI. It came right down to that number, and that's where it bounced. And this started calculating, I can't get the exact date here, but a long time ago. And this pivot came in. So basically the extreme ranges are these green and red dots on as far as the ceiling and the floor. They don't mean you're going to go there, but what it does mean, if we look at the forecast, we look at all the PPMs, the forecast is for basically CPI staying under control. Now, every other comment that you're going to hear, turn on any of the financial channels, and you're going to hear, we're still worried about CPI. We're worried about CPI. You shouldn't worry about CPI, because what's about to happen, I'm quoting Scott Bessent to a point, is that as we get into around the third quarter of this year, that's when we're really going to see the effects of productivity, AI, and from that point forward, going into 27, 28, probably into 29, we're going to see monster numbers coming out of GDP. We already saw like a print at 4.1 just in December. You're going to see 5 to 8 GDP. I've been telling you folks we'll probably see double-digit returns in the markets, possibly 5 years in a row. We've had 3, so we could have another 2 years of that number. So the forecast looking forward is really good. Okay, so let's go over and take a look at the database here. Looks like everything's done. All right, so we're right almost at the 42. That's the marker. So we did get some new entries. We got basically, we'll call it 700 against only exits. We got about 330. So we're starting to get some more traction. We had a bullish rotation these are for tomorrow morning's orders on the open, and we're at 41.49. So we're still seeing traction here. And when I put out on the newsletter the other night that this was a bargain to buy when the indices were negative, it's because we're still seeing positive rotation. What this means is that these are indications of trends that are ending on the sell side and new trends beginning. And on the dailies, they last 35 to 50 days. So basically 2.5 months, almost 3 months. And this can actually recycle as we go forward. So this is a very positive. This is on a short term. real quick, I'm just going to pop up the weekly numbers, and you'll see that right now we're at 61.76. This is a robust number, and I've talked to you about this before as we're looking at a potential rotation going into April to June, maybe extending to July. We'll be able to even get a better reading on the rotation. And these are internal trends. So what they are, let me zoom in, there's 8,824 stocks in the stocks, mutual funds, and ETFs that are in trend mode. And when you get to that 60, actually it's above 42 is minimum, but when you get to 62%, we saw it in 2024, we kept coming down to 61, bounced back to 68, 72, back to 61, but it maintained that. And we rotated all the way into the election with very positive numbers, still looking forward. And of course, you know what 25 looked like. We had the crazy scare in April, the tariff scare. As I've said, whenever you see those, especially with the configuration of the database, and we got fairly lean on the daily database last April, but the primary, we stayed above 42% on the long term, so we never got really that negative. So this database is golden. The reason why I show it to you folks whenever I'm live or I talk about it I go through a fair amount of detail in the Substack newsletter on this is everything. This tells you, I've heard people tell me, oh, his database lags. Well, it doesn't. What it does is as trades come in, it has a forward-looking element that 50 to 60 days on the short term or the daily signals, but those can rotate and they can end up staying positive, just kind of rotating from selling off some of the taking profits and then rotating into new stocks. We've got 14,800 symbols in here. So yeah, 14,268. So there's plenty of place to rotate, and it gives a much different perspective than drawing trend lines or talking about 50, 200-day moving averages. That's fine. But what I'm telling you here is this is really, and I know a lot of you have figured out how valuable this is. And I think somebody pointed out on one of the last streams that I chose to ignore it in April. I ignored it to a point, except for our trading models and what we were getting on the intermediates. They stayed solid. So that debate will go on, I guess. So that's the setup. Let's go ahead. Matter of fact, I always go to the S&P, but I'm just going to switch out. I already have the Russell up here. And this is just the daily. We're going to do a daily and weekly. Then I'll go back to S&P, NASDAQ, and we'll just see how fast I can get through a lot of symbols. I just want to throw a lot of things out there for you folks to kind of absorb. So what's been interesting, going back over here, when this thing bottomed here on January 2nd, we've been pretty much going right up. We have been able to make a new high. When you see the S&P, we've played with the new highs, but this is the thing I want to point out. This momentum is going to start to bleed off a little bit, and I think we still have some sideways movement. You can see the dotted lines are the WaveTech algorithms, which are projecting a loss in momentum here. We don't have any upward fib targets or anything. We're trading just around or above the highs, all-time highs. So we're probably going to come back in a little bit. We'll stay above this 10-period moving average. It's just a simple average. You don't need to get too fancy. But we should stay above that number, which is going to be the 2620 area here. And so just look for kind of a sideways range. We could get some downward, but that would not happen, even have a chance until, let me see here. Yeah, around to the 20th of January would be the breakdown point that we're likely to get to. So let's go to the weekly. I want to show you what that looks like. So weekly is also pointing to, if we look out a little bit, to some kind of consolidation. This goes all the way back to April, crazy moonshot. But you can see here we didn't cross over until mid to late October. We made a new high, and then we pulled back, and now we've punched up again here. This whole situation here has, I'm going to go to monthly. I'm going to go out one more step because I want to see what this looks like. Yeah, not a lot of data, only back to 2017 here. Let me do, well, just for right now, we'll go out, and I'm putting the IWM up. You can see we do have on a monthly, excuse me, we do have on the monthly targets up here at 286 and 307 as long-term targets. But my issue here is I don't have enough data for the algos to calculate. I'd have to change some things up. But it looks like, once again, kind of a consolidation. We'll see if these fib targets can stay valid. But we're definitely seeing a bit of a shift. So let's go inverse here, and let's use the E-minis, and let's just go backwards. So this is a much cleaner kind of configuration. I've been talking about this, is that we're looking at, as far as, I'm not sure what's going on here with these algos. Let me look at something. Okay, I'll leave it alone from right now. Yeah, so we're just not getting any calculations here on the monthly, but you can see the upward slope on the WTRs. Let's just go down to scale and go to weekly. This will give us a little better look. This is that continuation pattern I told you about. You get the spike up, and then you go sideways, and all of these indicators are in what I call trend maintenance mode. And so we're going to continue to climb up, and this angle of attack over some time here. Let me just broaden these out so you can see this a little better. You can see this is this is a very strong pattern, and this is on a weekly. So we're looking, this is out in October of 26 out here, and just the moving average is at 75, 76. So we're looking at a continued rally here, folks. And I know folks want to get negative, and we'll find out if tomorrow we get the Supreme Court rules or make some ruling on the tariffs. I'm pretty sure that I put a small bet on Robinhood that 4 justices are going to support that they're okay. I don't think they're going to mess with that. That would be potentially have to return somewhere between $600 and $700 billion. That would be not a good moment in U.S. history. Then you got every right to troll Trump in that one. But I don't think they do that. I think it's too detrimental. At least that's my opinion. We'll see. They were supposed to roll last Friday, and I think they release one a day or some. They have a really strange release on how they put this stuff out there. But the projection from the algos, from the technicals, and the quantitative is telling us that this is going to happen. The same thing if we just go back to what I was talking about in the database just a couple of minutes ago. That confirms forward-looking moves to the upside, that we have literally almost 9,000 stocks in a trend mode to the upside. So 60% of everything out there is in an upward trend. That doesn't mean they can't correct and move around. It's not a straight line, I'm telling you. But what it is that general trend. And there's plenty of room when you have 14,000 symbols in a database like this. you get a much better feel. And most people are, doing what's their analysis? How many stocks are above the 200-day moving average? They could be above the 200-day moving average and declining sharply. Those are just really amateur statistics. If you get into real quant, we have 600 variables that we're looking at every symbol in our database every day, every week, and updating all of that data. And we have Monster. We've been running this data for almost 30 years on symbols. So we've got a Monster database to look at, and the characteristic, once you get to a certain point with data, just a quick data story, is data tends to normalize, and you start to get where the standard deviations and all the normal statistical numbers that you look at normalize, and they pretty much do what they've done in the past to a large degree, and very seldom for instance, like in the pandemic when they shut everything down, that blew out 2 standard deviations of what was normal. And, that happened in '08 as well. The Lehman collapse pushed us, I think, it was like 2.5 standard deviations from what's normal. And I'm talking within our database. So know that when you've got really long math, when I hear, like for instance, when people are talking about the 4-year cycle in Bitcoin, well, it's only been around 16 or 18 years. So that's not enough to normalize data. Anybody that's ever taken, statistics class or anything, you need to have a lot of data, a lot of randomness to get to a normalization where you can start to really put stakes in the ground and stand by them and stand behind them. And so a short data sampling like that is hardly enough to make any claims about anything. But we've got about technically from 1980, if any symbol's been around to 1980 to current, we have monster normalization going on in database. So that's why when I see these moving averages, I see our database just tying everything together I'm talking about. When I see the database emulating that type of forward looking, and I know I can count on that. And I know everybody told me after 23 rally, 24 was going to be a negative year. That was it. The other thing I want to warn you about, anybody you see, especially Bitcoiners, claiming that the big banks just said it's going up. The big banks have never been right about much of anything. And they've never certainly give the little guy a little edge. Like, why are everybody telling, I should save this for Bitcoin, but why is everybody telling you that Bitcoin's just going up? Everybody, the banks, everybody. Why is that happening? I'm still confused. I keep telling you, I've got this article. I am going to get it out. I ran into a giant formatting issue on the program I was using, so I went back to good old Word. So as soon as I get a few minutes on the clock, today is a 12-hour workday for me, so I have a lot going on right now. So just know this normalization of data is a thing, and it's real. And I tell everybody, math over guessing, math. A trend line is not math. A static trend line means nothing. Trend lines are very subjective when you draw them. Yeah, I grabbed all the points. So what? They're just points on the chart. They don't really have any relationship. And I know somebody go, oh, look, I got 14 anyway. I'm just telling you, you want more to your decision process than just a few data points and then a trend line off of that. So the nice thing is you guys keep coming back, or you can get the WaveTech software, and not the indicators, but the actual portfolio software. The stuff I show you every day is $100 a month, $97 a month, $380 a day. But you're going to have that data. As long as I'm putting out there, there's probably no reason to buy it. So I'm cannibalizing myself. But it's so important to understanding these trends and what's going on. Let's do one last drop down, and then we'll go to daily, and then I'm just blazing through the rest of this stuff. I'm 35 minutes in. So here's the sort of a concern here, as we still have, look at even the daily is projecting higher. Short term, it looks like it wants to come back down again. We saw if we dissect what happened in the markets yesterday, for the most part, Apple, let's just call it the Mag 7, most of them were slightly down. The S&P was down, I think, 0.02. So that's why we're talking about the rotation to the small cap. You look at the year to date, mid cap, small cap, MDY, IWM are outperforming SPX or SPY and the NASDAQ. So those things are happening. I don't believe they're significant yet, just because of the formation and what I'm showing you tonight. So I haven't had a chance to dig in deep like this. And I won't go I'll go through and answer some of your questions here when I finish up. So let's go ahead and let's go to NASDAQ. I almost did. The cardinal rule on live streams: never look at the chat line. You'll screw up everything. You won't have any flow anymore. Okay, so here we are on the daily. Yeah, this is the NASDAQ daily now. And you can see the red dots are just forecasting the close for the next several days, suggesting we're going to come back into the 40-day moving average again. I think we're just flatlined here. I don't think we're going to get any big down or up, but we're going to continue to grind here. So there's a fair amount of news coming out this week. So I don't think any of it's going to be material right now. I'm not sure what's going to happen from the standpoint of the news, as far as I don't see anything out there really to get sentiment to change very much. So it looks like slight upward bid, still upward story, still want to buy the dips, especially down into these key numbers. 21, 40-day simple moving averages are going to be your mark. Look at the algorithms on the down here on the PPMs, completely flat. So we started off with the IWM. So I'm going to do MDY just quickly to show you similar patterns here. So this is interesting. So I still think the better of if I had to pick another asset class, I would go more mid than I would go super small. There's still a lot of junk in that Russell. The mid caps, my thesis last year was that the mid caps would do better. They didn't. They were actually the underperformer on the year. I think it was stacked NASDAQ, S&P, Russell, and then mid cap in those four indexes. So the reality was we didn't get that burst, but I still think ultimately from a company basis that you're still going to see mid caps be a better play, just because they're in better position to play into this whole AI productivity and efficiency. Those are the companies that have the most possibilities. They're large enough to play in there, and the way that money flow has changed just from how money's borrowed from private to banks. There's a whole lot of different avenues now for capital and short-term and intermediate and longer-term capital. So they're going to be the best, in my opinion, to be able to participate. So this is daily, so I'm just going to buzz through the weekly chart. Not a lot of dialogue around it. But you can see, let me just, it looks similar, but look at the red dots. Are all basically what you're going to do is continue to climb along this 10-week moving average. So a 10-week moving average is similar to a 4. And if you get out here to the 40-week moving average, that is more like the 200-day is equal to the 40-week moving average. So there's some relevance there. And that was when we were building the original WaveTech process back in the mid-1980s. We chose the 1021 moving averages for different reasons. And one of the 2140, if you go to the previous level chart, so we want to do multi-series charts, so you can use daily, weekly, monthly, and they all reconcile together. I won't go through that now, but that's why we chose those numbers the way that they, one series would match the next level up on the series. So you have daily, weekly, monthly in a hierarchy, and all the moving averages, support and resistance numbers. You could really figure out a lot of the configuration, what was likely to happen. So that's why those numbers were chosen. All right, let's see what time we got. Yeah, I should be able to get through this. Let's go through, and then I'll come back and do some questions for you. So here's the weekly gold. I remember last year looking at this projection. You know, what are we looking at? We're looking at 6,000 gold. So this whole setup here is just crazy bullish. I want to go to a monthly chart because I'm looking for some kind of, if there's any upward Fibonacci targets. I mean, look at this, is ridiculous. A lot of this, we're not looking. I'm just trying to get a number here. 1 second. So if it came up to where it's being projected, and this is out 2030, by the way, so like 3.5 years from now, we're looking at 8,000 gold, 76 plus. So those are crazy numbers. And I know there's a big argument, gold, Bitcoin. I think gold's much better, much better as far as the returns that are being forecasted, because all the numbers that Tom Lee and Saylor and these guys are telling you are just made up. Like, Tom Lee's out there again, like he thinks in the next 16 days, Bitcoin will double. I mean, who could listen to that much more? He frustrates me. So it's just kind of ridiculous. And I guess he's trying to get something in, some people to come in and bid it up to that level. Not sure how you're going to convince them of that. All right, so gold is pretty solid. This is a monthly, long-term. We're looking at finally, possibly in May of this year and August of this year. This is the numbers we're going to want to watch. So remind me, is that this is a point where we could see some softness start, maybe a consolidation. I can't imagine that we're just going up like this, but anything's possible. I think I said that 2 years ago when gold started to run. And, so we'll see what happens. Got to do silver. So silver is being projected 150 under that same scenario. And currently, 88? So it's somewhat vertical, I would say, this last move. I think in December, I think maybe a 38% rise. My expectation is somewhere we'll do some sort of consolidation. That could be over $100. So when we look at, so I don't have enough data here to forecast. Let's just go down to weekly and see what this looks like. Yeah, so weekly, this was a concern. So weekly's being forecast that in the next couple of weeks we could get to a peak, but the angle here, I want you to look at this number, see PPM over here on the far right, 3.67. That is an insane situation here. Let me hang on. I want to see if I can find something very quickly. If not, if I find it, I'll bring it up. So just give me just 1 second here. if it pops off the sheet for me, then I will bring it up. I need just about 30 seconds. All right, I'm going to make sure that I have this on the page. But what I was going to show you is that the probability chart for this, the fact that we're in parabolic phase here, and what happens in these kind of markets when you get here, especially when you see the PPMs forecast peak out, if we do get this turnaround, then that will equal a move back to the 10. This is weekly 10-week moving average. Right now is 60, let me pull that up, 66, 61, and that's rising, and that's weekly, so that'll be probably around 70 cents, 75 cents. That would be a point where we would set up some kind of consolidation. But this thing's in a run, doesn't mean it has to stop. Matter of fact, it could be, I had a target of 105. So we're at 88, so that's not far away anymore. All right, let's do Bitcoin, and then I'll look at your questions. And so I covered quite a bit of ground here pretty quickly. So this is my argument. We just looked at gold and this monster cyclical trend, and we look at Bitcoin, and we don't have anything like it. In fact, we have more consolidation to down. I think it's possible for us to hit the 200. This is a weekly 200-week moving average, which is down at 57 right now, but rising. But $58 keeps coming up on everything I do. I think we could rally as high as 102, 104 from here, and then see a shoulder set up, and then a retest of the, we'll call it 80,000 lows, something around there. Doesn't have to do any of that, but we're probably stuck right below here, 104, and the support level is going to be right around 90, maybe 89. So it actually has built a pretty good base here for the markets to build off of. So not necessarily negative right now. Let's go to a daily, and I'll show you this. And the daily data sheets have been pretty good. Let's take a look here. So you can see daily is sort of giving us a peak. Just trying to get this so it'll show up right. So you can see some negative momentum starting to come out. The red dots are suggesting that we're more near a peak than a breakout. So we'll see how that plays out. Like I said, get the newsletter. Substack's $8 a month. I put out the data sheets every day, so you can get those, and that will help you navigate through this. All right, so let's go to some questions here. Yeah, the banks were all down today too. And what's interesting is there's a lot of banks in the Russell. So that's another issue to be somewhat. I'm just looking through some comments here, folks. Bear with me. Yeah, so somebody, indicators, KindleReport.com/indicators will get you to the sales page, and there's some videos, and you go right there, so you can get that. Yeah, the PDX bull, give me a symbol you want me to look at. I'll take a quick look. All right, let me see here. We need to get Dr. Baker on here. He's a pro in cannabis stocks. Yeah, Harry Toe, you're right about trend lines. They're like laws meant to be broken, correct? So this is the thing about the indicators and the PPMs. What we're doing is actually measuring the probabilities of the moving average, whether it's going to hold or whether it's going to go through. And this is the thing everybody talks about. I kind of laugh. They'll talk about, oh, we're above the 200 or we're below it or whatever. And they're even using support resistance. What they don't look at is what the angle of attack is. And this is my theory. But the angle of attack would tell you what the probabilities are at staying above or below in any of the moving averages. I use at 10, 21, 40. So if you're coming down to the 21 day or whatever week, whatever, and you have like a momentum greater than 0.25 or something, like right now, the possibilities of going below the 10-week moving average on silver is negative. It won't happen. Okay, so if there was some freakish deal where the market declined and you're looking at the 10-week moving average, what I said it was like 70, 72, whatever it is, you would be, back up the truck and buy all you can buy. And so whenever you see that, yeah, I think somebody's asking about the power to bill and run everything 24/7, 365. Yeah, I'm really bullish on the micro nuclear. I think nuclear is going to come into play. That I would tell you this. I think there's a reason why a lot of these semiconductors, TSMC, the others, Intel's building a monster plant down in Chandler, which is in the valley, in the Phoenix Valley. And I think the reason why everybody's like, oh, don't they need a lot of water? Well, they figured out how to recycle and a lot of the water and get it ready to run through the coal and do everything it needs to do. But we're nuclear and hydrogen powered here. So if you drive a Tesla, like I have to go down to the valley on Saturday. I live up in the mountains. And if you drive a Tesla in Phoenix Valley, Phoenix is the greenest city in this country. You've got hydropower. There's some gas power out northeast in the state because there's nothing out there. But there's nothing, or not hydropower, but hydrocarbons, gas and maybe, I don't think there's any coal. I think it's all nat gas. But all of this stuff is there. So I think Phoenix is a big spot why these big chip folks are coming out here. And Apple's are building some big stuff here. It's becoming the new Silicon Valley is right here in Arizona. So Arizona's hot, no pun intended. But it is definitely the spot, and I think it's because of the nuclear. From my understanding, there's a fair amount of capacity, and plus we have, of course, the Hoover Dam and all. We've got the saltwater project. A lot of hydro and a lot of nuclear. So anyway, let me do one more. Do a couple more here. Yeah, that actually, Michael, that's a good idea. on the hydrogen power. No, it's eight. I'm sorry, somebody's correcting me, and you're right. Substack is $8, and so it's $80 a year. You have that correct. So kendallreport.substack.com, and I do at least 2 or 3 freebies every week, and I will get the annual report out. I have had just a bunch of stuff that came out of nowhere on something that's just taken all my time, including the rest of today when I'm done talking to you folks. Let's one more question. We'll call it quit. Yeah, I think I addressed the SCOTUS news on the the SCOTUS news on the tariffs are going to be, I think, neutral. I think it'd be positive. They're not. I don't think they're going to knock that down. This here. Okay, there's some message in 1 second here. Yeah, so I see Wayne Capital, where you get the portfolio software. So that's a little more complicated. Right now, do this. Send me, I will send you, you can go to Portfolio Expert, and there's no E in expert.com. And you can go there and you can set up a free account, and then you can go in and get it from there. And it's prorated. There's no trial. If you start right now, you pay for a half a month, and then first of the month it's billed $97. So so Wayne Capital, you're not Wayne out of Australia. If you are, send me an email to info, Kendall Report. Been trying to reach you. Yeah, I know, the 2026 outlook. Yeah, it's like a little bit over half done. It needs some TLC, and I can get it out the door. And I have I have this other report that is basically, it's turned into a book, a mini little ebook. So that's why that's gotten held up. When I started digging into it, I thought it was a lot closer to being done. And the first 3 chapters I went to needed to be expanded quite a bit. So it's grown in from a 20 page, it's probably going to be 40 some odd pages. But it's really, let me just see if I can. So this is what it's looking like now. Let me show you. So a view from 4 decades, a lesson in market psychology. And this has been all generated from just watching the Bitcoin community, watching the millennial traders come into their own, not criticizing them, but they have, this is a thing that you learn when you've been around and watched multiple decades, because my mentor, I was still around when there were, I probably caught one of the last few of the tape readers out there, the old ticker tape readers. There was a guy that used to come into our office, and I think it was 1979 or 80, he was hanging around. They still had a ticker tape in that office. And it was interesting, but I got to talk to him. I was a pretty young guy at the time. I think I was 28, 29 years old. And it was interesting, actually, him talking about it. I use some of those same techniques in reading an order book, same thing, ticker tape order book, and your time in sales. So there's, if you're you have to realize I came out of the world where I was a trader in a pit, so you couldn't look outside of your world. You were, focused. You had the blinders on all day, so you had the not a lot of ability to follow other markets other than maybe something you did overnight and then decided to put some trades in and check with your clerk to see where it was at the time. But but yeah. So anyway, that should be out. I've got what I'm working on now is just putting a few graphics, and this one should be out. And right now I've got to figure out how to distribute it. Probably what it's going to be is a email alert, and there's going to be a link or a PDF embedded in that. So there'll be a little teaser. And if you're a subscriber, free or otherwise, you can get this report when it's out. So, but it has grown into a true monster, and I could still run into one of these chapters. I believe I'm at chapter 14, and there's 20 chapters. So like I said, I kind of blew myself up thinking when I started reading and doing a final edit, it didn't work out like I'd hoped. So, all right, folks, we're going to call it quits. Appreciate everybody. I want to just keep going. I mean, I miss the days back in pandemic days on Wednesday when we used to do those 3-hour live streams. I would come on at noon, 1 o'clock on New York time and go to the close. Those were fun. Let me just see. There's one comment about Bake. I'm not sure what Dr. Baker's Twitter is, but you can, if you look him up, I always forget because it's not the obvious, but he does. He's written a book on all the marijuana stocks, all that stuff. So, yeah, there's so much going on. For instance, Ted brought up the Chinese bonds. You got the Japanese currency starting potentially break out, and meanwhile, their bonds are going higher, but no one cares. The currency's still declining, so there's something else going on. Probably this special election that they're trying to call right now. There is an absolute ton of stuff, and typically, folks, just in closing, a lot of these metrics and these stories are used as some kind of hype mechanism or something to get somebody's opinion out there. So just know, and I was going to say that I said it earlier, but the banks are not your friend. They're not going to tell you that Bitcoin's going up to numbers because they want you to win. There's something going on here. I can't wait for us to find out what it is, but it's not what we think. That's all I can tell you. I did see an interview with Eric Trump, and I didn't know this, but I think it was 2020 when Trump got out of office that the Trump family got debanked on 300 bank accounts. They run a multi-billion-dollar enterprise, and they're getting debanked. That's how nasty these people were out there, how much they hated Trump. And he said, after that experience, you have to find something else to do. And I can see why they do that. I just don't get why. I've never had everybody I walk down the street tell me, you better buy now. This is your chance to get in. And then you see a little blip up to 94, 95,000, and everybody's heads popping off like there's something big happening. Maybe it does. I don't know, but I've never seen something promoted by the big boys, the big players, and everybody you can't go on any financial channel and not hear Bitcoin's going up. You better buy. It's a long-term investment. It's been around 12 years. It's a $2 trillion asset. It's respectable for sure, but it's, but gold going up, I mean, gold's got to be $38, $39 trillion, I think, something. It's a lot bigger, at least 25 trillion plus. But my point is, there's no, not everyone's running around telling you to buy gold, and gold's going up. Everybody's running around telling you to buy Bitcoin, and basically it's in a downtrend. So are these guys just trying to bail out? Are they trying to get it up to 100 so they can roll out? I don't know. There's a big seller out there, and they've been very dominant in the markets. And that's why another reason to get that report I was just showing you out, there's some scenarios that are painted out in there that most people think if you got everybody holding the asset. So let's say there was no I'll do this at the end here today. There was no Bitcoin available. There's zero float. What's going to make the price go up? No one can buy it. No one can sell it. Everybody's holding. What happens? You're being told that that scenario is going to make you rich, and it's going to go up. So the way prices are discovered, it's on everything, every stock, every mutual fund, everything, it's the marginal buyers. It means the float. The first thing, if you're a half-ass analyst at all, first thing you're going to do on a stock is look at the float, look at the turnover. You're going to look at a lot of metrics because you need that float and you need that rotation in price to cause it to bid up. You always have to find a bagman. You got to find another bagman because somebody wants to sell their stuff to get the price to go up. So that marginal pool of assets is what determines price on everything. Doesn't matter what it is. It's the float. It's the margin. So if you take the theory is it's scarce and there's none available, the price is going to go up. My question, please leave a comment in here and please explain to me how it's going to go up if there's no one to pay a greater price than the previous guy. I'm all ears. Okay. So anyway, folks, on that note, we'll call it quits. Thanks. I didn't really get a message out to everybody. I think I did mention I was going to do this last night in Substack. So Substack will be out in a few hours, $8 a month, $80 a year, and it's I think $6.50, and you can get the indicators. KindleReport.com/indicators, and you can go indicators 24 if you want. There will be a link when I get done here. I'll put that in the description so you can go there. And then you've got, you got Wave Tech and Portfolio Expert. And I don't want to confuse anybody, but go, if you are interested in Wave Tech, go to Portfolio, and it's just X, no E. Portfolio XPERT.com, and you can find out about some of the other products there. The site's somewhat antiquated. We haven't really pushed out a lot of that for a number of years. We've just been on the indicators and all that. But anyway, that's where you go. And appreciate you watching. Appreciate I see a lot of familiar names. So thanks again. Hopefully we'll see you soon. Next video will probably be on Thursday morning, and then there'll be one for Friday morning. Should be, those will be produced 10, 15 minutes, no hour and 8-minute marathon. Thanks again for hanging around if you were here the whole time. Appreciate it. And if you just found the channel, make sure you subscribe, hit the notification bell, all that good stuff. Okay, folks, see you soon. Not sure if you guys can hear me, but yeah, maybe we'll do a marathon 3-hour middle day. Oh, somebody want to know if you're hearing me. Dr. Given was my floor name, we'll say. Hey, Mike, if you can hear me, reach out to me on Discord. I'd like to get a chat with maybe you and Todd and a couple others. We can do it on Discord. Yeah, I'll be lucky if I get to bed by 5 a.m. New York time. I've got some new music that I produced. I'm going to put it out to you guys as well. Keep coming back, folks.